Hey, what's up, everybody? In this video, we're going to be discussing this article on MarketWatch.com and by Andrew Keshner. Before we do, if you don't mind, please hit that thumbs up button on the video and definitely give me your thoughts in the comment section below. Now, I have received an email from a couple of different people about this article, so I thought I should share this with all of you. I did do a video, I believe it was mid-2021, when this story broke, that anything over $600, if you receive $600 on PayPal, receive $600 on Venmo, receive if you sold anything for $600 or over on eBay, I believe it was anything over $600, any transaction was going to be reportable via a 1099 form. Now, let me also add, I am definitely not a tax expert. So if in doubt, definitely contact a tax expert, an accountant, or whatever the case may be, because I am definitely not that. But it says IRS pauses a rule requiring people to report PayPal, Venmo transactions over $600. Here's what went wrong. And it says efforts to raise the threshold were not ultimately included in a year-end spending bill. Very interesting. So we're going to scroll down and read a little bit of this article. It says, to avert taxpayer confusion in the upcoming tax season, IRS is delaying a rule that would have required e-commerce sites and payment platforms like eBay, Etsy, and PayPal to send out tax paperwork to such a wider swath of people in 2023. Beginning next year, 2023, I guess, payment platforms were supposed to send tax forms known as 1099-K to people who received at least $600 via these types of sites and payment platforms. The forms are typically triggered when a recipient receives at least $20,000 and has had at least 200 transactions. E-commerce business accountants and others pushed for a higher threshold, saying a batch of paperwork would be an administrative headache for companies and the backlogged IRS, and also stir up confusion amongst taxpayers. These groups applauded the pause announced Friday. The threshold was lowered in the American Rescue Plan of March 2021. Recent lobbying efforts to raise the threshold as one part of the year-end spending deal proved unsuccessful. On Friday, the House passed a $1.7 trillion spending bill, which now awaits President Joe Biden's signature. The IRS said the upcoming tax year will be a transition period for the platforms that were due to adopt the now suspended reporting requirements via Venmo, PayPal, and Cash App. Acting IRS Commissioner Doug O'Donnell said IRS and Treasury officials heard the concern about putting the new lower reporting requirements into practice. To help smooth the transition and ensure clarity for taxpayers, tax professionals, and industry, the IRS will delay implementation of the 1099-K changes. The additional time will help reduce confusion during the upcoming 2023 tax filing season and provide more time for taxpayers to prepare and understand the new reporting requirements, O'Donnell said. One organization pushing for higher reporting thresholds, which include companies like Airbnb, Etsy, PayPal, called the delay great news for millions of Americans. And it says, we appreciate the IRS providing this critical relief so that millions of people aren't unnecessarily burdened with tax forms in 2023 for splitting meals, selling used books, paying back a friend, or other instances where no taxable income was generated, said a spokesman for the Coalition for 1099-K Fairness. The delay creates a chance for lawmakers to find a common sense and permanent solution. The 1099-K is generated to report business income for goods and services and the required tax obligations. But many people use payment platforms to pay back friends and family, which is indeed very true. The IRS said that the lower $600 threshold was not intended to track personal transactions such as sharing the cost of a car ride or meal, birthday or holiday gifts, or paying a family member or another for a household bill. And that, critics said, was part of the problem. How do payment platforms distinguish between payments for personal expenses versus payments for goods and services? And that is indeed a very good question. And I'm not going to read any more of this article. I will definitely put a link to this article in my description box below. Let me know what you think. This should, in my opinion, be very good news if you're an eBay seller, if you're a reseller of anything. Maybe you resell, who knows what you resell. But if you're a seller on social media platforms, if you're a seller on platforms like eBay, if you consistently make money and receive money on PayPal, Venmo, Cash App, or whatever the case may be, this should be very good news. However, like I said at the beginning of the video, I'm not a tax expert. I'm not an accountant. So definitely, if any questions, contact one of them people. But if any of this is in question, definitely contact your tax preparer, accountant, or whatever the case may be. But this, again, in my opinion, should be very good news. Technically, anytime you make a profit on anything, Uncle Sam is going to want a piece of it. Anytime you make a profit, Uncle Joe is going to want a piece of that money. So technically, anytime anybody makes a profit on anything, we are supposed to be reporting them profits. Hit that thumbs up button on the video. Definitely share your thoughts, your opinions in the comment section below. I appreciate everybody for watching. Like, comment, subscribe, share, and I'll talk to everybody on my next video. Thanks a lot, everyone.